guys and gals, just want to shoot you a quick video on the 3S code indicator and how it works on an intraday basis. I get lots of questions about using it on an intraday basis, and as I've said many times, I primarily choose to use this on a swing trading basis, specifically like end of day charts, but I also do like to apply it to a handful of futures markets for intraday trading, specifically the S&P, crude oil, 30-year bonds, and a couple of the currency markets. But the S&P and crude oil has proved to be pretty lucrative on their own. So what I want to show you is Friday, February 8th, 2019 trade action. I'm up usually around 5 or 5:30 a.m. Central, catching up on email, looking at the markets, looking at some of the pre-market action, and getting ready for my day. So I start trading around 6 a.m. Central on an intraday basis. There's usually from about 6 a.m. to about noon, we have a couple of decent setups. And then after lunch from say about 1 p.m. to about the 3 p.m. close, you can also get some additional setups as well. So here on a 5-minute chart of the S&P, E-mini S&P, symbol ES, we had two confirmed trades. So starting here with the first one, you can see that we had made new session lows. That's new Globex session lows going all the way back to the 5 p.m. the prior day's 5 p.m. close. The market was very weak, and we're making new lows. However, we have a little bit of divergence going on here in the RSI. The RSI is not necessary. Any kind of divergence is not necessary. All it is an added layer of confirmation for me to gauge against. Also have two shorter term moving averages, the 9 and 15, just to give me a little bit of assistance, mostly when I'm in a trade on trend type trades, but also for entry as well. So we have our 3S code indicators plotting. The green arrows are indicating that we are making lower lows, lower lows, lower lows, and they will continue to plot until we stop printing new lows. So we did on this bar here. Once we stop printing new lows and we get a higher high, we have a number 2 point, which is our red. We stop making new highs, we come back down, gives us our number 3, 1, 2, 3. The pattern is voided when we make new lows, taking out the previous. So we start to count again, 1, 2, 3. So here we have a solid 1, 2, 3, 1, 2, 3. And we would look to take longs above these levels, but the market comes back down, makes new lows. So we start to count again, 1, 2, 3. Now instead of taking the initial breakout above the number 2, what we like to look for is a break in close above the breakout level. So the breakout level is the high of the number 2 bar. In this case is 26.91.5. So we really need to see a close at 92 or above. And this bar here, we close at 92.25. So then we would work limits on a pullback to the breakout level, which is exactly what we did. So we get long here. Our initial stops go below the number 1, and our initial target is the distance between the number 1 low and the number 2 breakout. Number 2 breakout is 92. The number 1 low is 87. So it's 5 points. So we're looking for about a 97 target. So we're long here. The market trades around. We get a pump up here at the cash market open at 8:30 Central. What does it do? It comes up and tags 97, not once, but twice, meeting our target level of 5 points. Good for $250 a contract. Market is rejected here at the 200-day moving average, starts making new session lows about an hour later around 9:30. Start making new session lows. We get a new 1, 2, 3. This would be the long breakout area, but the trade is voided because we get new lows. So we don't get long, no harm, no foul. We start a new count, 1, 2, 3. Now what's different about this trade is that, yes, we have a solid 1, 2, 3, and we get a breakout above the number 2 point. But what happens? We don't get a close above the number 2. So the high is 87.75. We just peek our head out and hit and make a high of 88, getting everybody long, false breakout, and then the market comes back down. Additionally, we have the shorter term moving averages pointing lower. That's why we wait for a close above the number 2 point. Market comes down, makes one last spike low here at 10:45. We have a new 1, 2, 3. The averages are starting to point higher. So we sit and we wait for a break above 90. This high here is 90.5. We need a break and a close above 90.5. So here's our breakout bar. Tag it again. So we have 1, 2, 3 touches. We finally get a close above the number 2 breakout area at 11.45. So that's when we place our limit orders at the breakout level of around 90.5 to 91. Initial risk goes down below the number 1 point at 26.80. Remember, the initial target is the distance between the number 2 and the number 1. So we have a low of 80, number 2 high of 90. That's 10 points. So initial target or reward is 10 points or $500 a contract. That's also going to be your initial risk. So we get long here on the pullback right at 90. The market trades higher the rest of the day, comes and meets our target objective at 2700 right around 1:30 p.m. So that was 2 trades today, 5 points and 10 points or 15 points. 2 trades on the E-mini S&P. And here's just a sheet that I've been documenting for February that you can see what could have been done on a 1 lot. Just trading the S&P in February. We did 5 points on Friday the 1st, and then this week alone captured, 27 points or $13.50 trading 1 contract. It's only averaging about 1 or 2 trades a day. If you traded 2 lot, that'd have been good for about $3,200, and that's only 1 week of trading. Also, I said I like to track crude oil. Doesn't set up as much, but that's okay. If we take a look at what crude oil did today, again, on a 5-minute chart, we only had 1 setup, unless you were trading at 4 o'clock in the morning, which I was not. So we had this 1, 2, 3 top at looks like 5 o'clock a.m. was also a winner, but looking after 6 a.m., we had a 1, 2, 3. It never triggered because we made new highs here. We have a new 1, 2, 3. The breakout down below 52.75, we get a sharp reversal bar, breakdown below 52.75. We then wait for a retracement back up to the entry, which we do get on the next bar. So we're filled at 52.75. We know that our stop initially is up above here at 53. Our target is a distance, so 53, 52.75, that's 25 ticks, so we're looking for 52.50. We come down and we tag 52.50. Look at that support. Comes down, tags 52.50, almost to the tick, and then reverses. So those were 2 examples of trades on the E-mini S&P and crude oil